So now this is the second way question will come from a single entry or incomplete record. Now this is when you now convert from this to double entry. Now look at what I was saying. We said the first step is to prepare the statement of affairs to get what? Opening capital, right? So you use items at the beginning, the same way we did to account for non-profit. Look at first January 2002, the first December. Use items at the beginning to get open capital. That capital we use for balance sheet. Step 2, we said prepare the cash book to get what? Now look at what I was saying. I said if you have a question whereby you have this is received from debtor, debtors paid to debtor, or drawings. So the essence of that step 2 was to get the debtor's figure the receipt from or drawings. So I said if a question comes with this, there is no need for that. You understand what I said? No. You were not paying attention. You were not looking up. That's what I said. I said the step 2, prepare a cash book. Then I said in brackets to get what? Receipt from debtor, right? And what? Or what? Drawings figure. I said the essence of that was those 2 items. So I said if a question comes with that, this is the bank column. It's a bank summary for 2003. You see here we have debtor's figure. It is a receipt from debtor. The receipt from debtor, debtor paid, so it was debited. The receipt from debtor. And also, look at the others here. So these 2 was the essence for that step 2. So I said if you have them in the question I was giving, no need of doing that step 2. Do you understand what I said now? Yes. If you now have the receipt from debtor and the drawings, now these drawings will be used for balance sheet also. While the receipt from debtors will be computed to get your credit sales. So I said if you already have them in the question that was given, no need for that step 2. Did you get it now? Yes. The step 3 is what? The control account. The control account, I said that before, you have the sales ledger and the purchase ledger to get credit sales and purchase. Okay. Then the fourth one, adjustment. Adjustment, we have the position here, we have expenses owed, rent paid in advance. These are the adjustments. Then the last one, prepare, which is now the main essence of what we're doing. Now we want to start. If you were paying attention well in the last class, when I was solving account for non-profit, when I was doing the credits, the purchases ledger to get credit purchases, because I know we didn't do sales ledger because we already have past sales. So it was only the purchase ledger to get purchases. I said if we have discount received, because that question doesn't have it. So I said if we have discount received and discount allowed, it will first of all come to those accounts, credit and control accounts. Then discount received and discount allowed can also go to the profits. Discount received is an income. Discount allowed. Did you get it? So that is now I want to start solving. And let's start solutions. So the first step, we said we should prepare our statement of affairs, right? So guess what? What is the essence of preparing this? Get our capital. That capital will be used for balance sheet. So we use the item at the beginning. So it's 1st January 2003, right? Yes. Okay. So now the same way we have our assets and what? Now we'll start here now. Asset, office furniture, right? Yes. How much is it? 12,000. Fixtures, how much? 15,000. Yes? Yeah, Rich? Okay.
Yes.
I need to say yes now. Huh? You need to say yes. How much?
4,000.
4,000. Yes? Yeah, Rich? How much?
2,000.
2,000. Yes? Is it liability or assets?
Assets.
Huh? Okay. Rent in advance. How much? 200. Yes. General expenses food. How much? Asset or liability? General expenses. Oh, how much is it? The next one. What is it? That's prepaid expenses. What is stock? Okay. How much? 2,000. That's all of it. Huh? Now look up. That's not all. We have to find somewhere for 2002. This balance brought down was from the beginning. If you remember what we did in account for non-profit, this balance brought down was from the beginning. That was brought down to this date. So this we use for the first. So that is bank, which is an asset. 8,000. So that's all. Add for me.
If they don't change it, you see that.
You have to pay.
1,200. For 1,200.
For 1,200? That also, if you call what is not there, the account will not balance.
Yes.
But 1,000 what?
200.
So this is giving us 2,000. So subtract it from 39 what?
100.
So our capital, which is lesser of bracket, is 39.
100.
Right?
Yes.
So if you now add everything, it's giving us 41.
200.
So that is step 1. Step 2 was to prepare this, but we already have this and this. So no need. Right? So move to step 3, which is what? Control account. Now, like I said, we have two types of control accounts, sales ledger and purchase ledger. So the sales ledger combines every item that consigns the debtors. The essence of preparing that is because we want to get the credit sales. If you watch here, there is no sales value. So since we are preparing trading corporate accounts, we need sales. So to get that sales, we prepare sales ledger control accounts using items that consigns the debtor, which is the customer. So we're going to have sales ledger control. And these are the steps of converting. We are now converting from single entry to double entry. I'll go and do like this. Okay. Now, sales ledger, I said everything concerning debtor. First thing comes to this place. You see debtors here. We have 2 days. I told you debtors always have a debit balance at the beginning. So this is the beginning. So this is the balance brought forward. How much? 4,000. The next thing, pay debtors 26,000. This is received from debtors. It means debtors pay. I said the rule guiding this is the debit side contains items that will increase the debt of the debtor, while the credit side contains items that will decrease the debt of the debtor. That's the rule guiding the control account. Now, I said trade debtor. With debit here, the corresponding entry comes credit in the sales ledger. So this will be bank. How much? 26,000. Okay. Now another item here is this trade debtor at the end, and it will be balance carried out. So it's how much? Now, what so? That's the item that concerns debtors here. Now another thing I said in the previous class, I said when you see discount allowed and discount received. Now discount allowed, what is discount allowed? No, what is I'm asking, what is the definition? What is discount allowed? Thank you very much. Remember, if you are supposed to pay, you are owing 10,000. You are owing. Then that's why they give you a discount of 2,000. How much will be remaining? So you see that it has reduced the amount you are owing, right? That is why I said the debit side contains items that will increase the debt of the debtor, while the credit side contains items that will reduce the debt of the debtor. If the debtor was already owing 50,000. And now they said he paid because here, remember I said it's received from debtor. It means debtors paid. So if he's owing 50,000 and he has paid 26,000 to them, what has he done? He has reduced the debt, right? So the credit side for the sales ledger contains items that will reduce their debt. So here we'll have discount allowed. How much is it? 300. So that's item consigning 32,300. Now this and this is supposed to be the same. The essence of preparing this is now the credit sales, which is why we are preparing this, so that we can get the sales that will go to the profit. So what would that be this? 28,300. So I will add this to become 32,000. That is the sales ledger. So you see that using those items that consign the debtor, we are cutting our credit sales. Now, let me also say this in case of exam. The essence of getting this is to get credit sales. In a question, this same question, they might also have additional information that they have cash sales. What do? You now carry that cash sales, add it to this credit sales. It now becomes your total sales. That will now be in the trading profit loss account. Let me repeat. If you are selling in your shop, even all these persons selling, it is not all of them, it is not even possible to only sell on cash. There's some person that will come and meet you and tell you that, please, help me, my mother swallowed short, so I'm looking for money, so I should eat. You will now buy that item on credit. What I'm trying to say in essence is that every retailer sells both on cash and on credit. Have you? Yeah. Because if you don't sell on credit, you will not have much turnover. Right? So the essence of getting this is credit sales. So if there's no cash sales here, you can take this like that, this becomes your total sales. You take to trading profit loss account. Do you understand what I'm saying? No, you understand. Listen. We have gotten our credit sales, which is the reason why we are preparing this. I said in some questions, they will still tell you that the cash sales is a particular amount. So once that happens, you are seeing cash sales and you still prepare this to get credit sales. So it means the credit sales, which is 28,300, if for instance we now have cash sales as 500, so this becomes the total sales. This is the value that will now go to the trading profit loss account as sales. To comprise of all cash sales means that you are selling for people and they are paying you cash immediately. Right? Right? While credit sales means you sold but you have not collected the money. So it is the totality of it that makes up all your sales now. Right? I'm saying should in case the question also have cash sales, so that in case you see it, say, they didn't tell us this one. I said, not tell you. What am I saying for that? Yes, most likely might come here in additional information. But if you don't see it there, the credit sales become a total sales. This is it's simple to understand. I've explained it for you. Huh? What? If no, you will not add it here. The cash sales will not come to sales ledger. What I'm saying, after you have derived your credit sales, because you can't post this as your total sales if you still have cash sales. This becomes credit sales, fine. Then we want to know what is the sales now that will now go to, once you are preparing trading profit loss account, at the right hand side, you normally put sales now. Yes. So these sales comprise of cash and credit, which is the total sales. So I am saying, if a question has a cash sales at the additional information, you add what you have gotten there plus that one, it becomes the total sales you post there. But if there is nothing there, what you have done here becomes the total sales. Are you still confused? I'm just saying it should in case. So now that's sales ledger. Now let's get purchase ledger so that we can get our what? Credit purchases. Now purchase ledger contains items that consigns the creditors. Okay? The creditor. So I'm going to start from here also. Creditors. I told you creditors have a what? A credit balance. So we have balance brought forward, brought down. At the beginning, 2,000. Now if you check here also, the same way we have for debtors, they paid creditors. So paid creditors was paid 3,000. So the corresponding entry comes here as bank. How much? Now for the purchases ledger control account, the debit side contains what the creditor is receiving, and the credit side contains what they are giving out. Now, the next thing we can post here is our discount received. Which is how much? 400. Okay. Now, the next thing, our balance carried down, which is what? 1,500. So we now have our credit purchases. How much is it? 19,900. So that when we add this to
No, that's for the total.
yeah, what?
90,900.
19,900. So these two are supposed to be the same.
Yeah.
So 19,900 minus 2,000 is what?
7,900.
So this is 19,900. So we have gotten purchases, we have gotten sales to prepare our trading profit loss account. So this is the third step. What's the fourth one? Adjustment. Now what are the adjustments? Now here they gave us rent paid in advance, to value, and also have rent here. General expenses owed. We have general expenses here. General expenses. We have the position. These are the adjustments we do. Now let's start with rent. Now rent. Rent is an expenses. All expenses have also a debit opening balance. All expenses have a debit opening balance. Okay? So now we will start. Okay, let's start from here. Rent paid in advance. Now what? Remember, paid in advance. I said for the current year, 31st, it is always less. Why any dates that is not, remember all these we are preparing, we need to prepare our final account, which is always at the end of the year, 31st. So all these for advance is less. Why other dates that is not the current year for payment in advance, you want to do the reverse of what you're doing, which is what adding. Okay? So for here now, that if we have rent here 400, which is credit, the corresponding entry comes debit, bank as what? 400. Okay? So rent paid in advance, the balance brought forward. We are adding it. How much? 200. Okay? Why this we are lessening it? So we have balance carried down. How much is it? 150. So that's what consignment. So if we have 200 plus 400, 600. That's 600 minus 150. 450. So this 450 is what will go to the profit or loss account. And this becomes 600. This is what is going to the profit or loss account. So we are done for rent. The next one is what? General expenses. General expenses. Now this one, they say O. Okay? So we have general expenses here. We also have bank. How much is it? Okay? So now we have general expenses owed. Now said for this current year, you are adding, since it is accrued, for any date that is not this, you do to reverse, which is less. So this will come here. Balance brought forward. You are lessening from the actual value that was paid. How much is it? 100. 100. Huh? General expenses owed is different from rent paid in advance. These two are not same. This is advance, this is owed. This is accrued, this is prepayment. For the current year for advance, you will less. Why this? For owed, you add. Then, date that is not the currency, you do the reverse. So if you are adding here, so it means you will less for this. So you are lessing from the value that have been paid. So if the paid general expense is 500, the corresponding entry is there. So we are lessing from this. The lesson becomes the opposite entry. So that is why this is coming here as balance control. Oh, 100. So we now have balance carried down. How much? Which is 250. So we are now adding it now with the one you paid for. So 500 plus 250, this is what? 750. So what will go to our profit or loss is what? So this becomes any other? No. So we now do our depreciation. Now depreciation, they told us two values. The first one, furniture and fittings are to be depreciated at what? 5% per annum, right? So we come here, furniture and fitting. 5% is 5 over 100. Are they? Times furniture is 12,000. So 5% of 12,000, what do we have? 6,900 is what? 600. Are they? So the depreciation is what? 600. Why? The next one is equipment of what? Depreciated at what? There's something I'll show you at this equipment. You will even notice it. Now we don't have equipment here, right? Look at equipment. They paid for, they bought equipment. But watch the date, 30th of June 2003. It wasn't at the beginning. And now they said per annum. Per annum is 1 year. So this June they bought it is what? Half of the year. Do you understand? Yes. This depreciation of furniture and fittings was at the beginning. So we use 5%, the full 5%, which is for 1 year. But now they bought this at the middle of the year. So it is just 6 months that it has completed. So if we use 10% on that 4,000, so we have 10 over 100 times 4,000. What do we have?
40,000.
How is it 40,000 divided by 100 is what? 400. Abi? Now this is the value for per annum, which is 1 year. But they have used this for just 6 months. So what do? We divide by 2, so our depreciation becomes 1. The reason we did this was because, you see, they specifically put that. So if you're not conversant with this, you will just do 400 and it has to be up. I can't remember. Yes. So we have done the adjustment. So the last part is to prepare our final account. So write this part so that I can clean and prepare the final account. Yes, sir.